What's going on, guys? Welcome back to another video, and in this one we're going to go over a few stocks that I am looking to potentially buy the dip on or scale into as the overall market sold off and we're seeing a bit of a tech correction, which we need to come down and get some better deals on these stocks. So I do welcome it, although it doesn't feel good day to day with the red, but longer term it'll pay off. Now you can see here that the dark pools did not buy this dip today, which leads me to believe we could come down a bit more before having a bounce, but we'll just take it day by day and see how it goes. Now, I'm not looking to play too many options in the current market because it's so choppy, and actually today was kind of flat, so it's not the best to play options in. You actually want to be the seller of options in a market like this, or just buy long-term shares and wait it out. No need to rush and waste money on trading every single day, but we'll get into it. If you guys enjoy these videos, please like and subscribe, and let's go. All right, so first up, we have SOFI. Now, overall, the market had a red day. I think SOFI held up decently, though, given the overall sentiment of the market. As you can see, extreme fear right now. So these are the days I actually prefer to buy while things are on sale rather than buying the rips. But, this article reiterates a lot of the other articles that we have been covering, just talking about SOFI, worth considering. It goes over, their recent earnings. It goes over their membership increasing. A lot of the same things we've been covering. Talks about how SOFI peaked near $24 on June 8th, and those that chased above 20 were punished because obviously the stock has fallen, which is why I prefer buying SOFI in the 14 to 16 range. So when these catalysts do come, you're not chasing, you're ahead of the game. So just something to keep in mind. You want to buy on those red days. It talks about SOFI's earnings per share, roughly $4.40. Goes on to mention the $30 price target and other price targets that SOFI has been given. And it also says that traditional banks should be worried about SOFI as they are one of the leading neobanks. It talks about SOFI could expand technology segment to 25% from 15% of its revenues now. And yeah, just a pretty bullish article. A lot of the same things that we've been talking about, but it's always good that SOFI is getting this coverage lately ahead of these catalysts. A couple more things to mention with SOFI. They have that Galileo webinar coming up on 10/14. The call and put ratio right now is about 50-50%. So we're just going to keep watching this one, as well as the TikTok challenge they have going on right now. Just really good advertising for SOFI. So those are all things that I have noticed lately. And here is the chart for SOFI. So I'm zooming out. We're just going to the weekly, less candles, and it's just a clearer picture here. Trading in this range pretty much from 15.50 to 18 lately. Obviously the lows are around 13.30. I'm not sure we're going to get that again, but I could see this possibly coming back down to 15.50 if the overall market is just selling off hard. But I really like where we're at right now, holding 16 pretty decently, or the high 15s. Probably going to bounce around in here until we get some crazy news that breaks SOFI out of this, but this is where we're at right now. I think anything in this current channel is going to be fine, and we're just holding up until we get some bullish news. All right, second up is Facebook. So as most people are aware, there was a huge outage today on Facebook, Instagram, and the stock went down quite a bit. And this is also because there's a whistleblower that is talking about Facebook, and it comes out right here. It says, Frances Hagen revealed herself to be the whistleblower who provided key internal company documents to the Wall Street Journal, and basically goes on to say that Facebook is prioritizing their own profits over public safety. So the stock is down quite a bit. However, Facebook is just such a giant leader, nothing's going to happen to it. We saw this back in January, actually, when there was some political things, going on, and a lot of companies were saying they were going to pull Facebook ads, caused the stock to sell off to around 245. And I was actually buying that dip. Anytime things have an overreaction, especially a good company like Facebook, it's a buying opportunity, and then it went on a huge run. Now, I don't like buying this one as high as it's been, so it's just been on watch for me. I would ideally want this to come down to 315 or less would be great. Under 300 would be a steal. So we'll see how that goes, but Facebook is definitely on watch, something I would likely just put in my retirement account. So here's where Facebook is sitting right about now, right on the trend line. So if it breaks that, then I could expect this to probably come bounce off the 50-day moving average. I don't think we'll see much lower than that, but obviously anything 300 or less, I would definitely be buying. So this is one that's on watch. I'm watching this for a bounce. Obviously, overreactions like this, typically get bought up, and I noticed it's up a bit after hours. So going to be watching this one the rest of the week, and if tech continues to sell off, I'll probably start scaling into shares. All right, next up we have Lemonade, and obviously this chart is all over the place, but as you can see, most of these dips actually paid off. So we dipped back in October of 2020 to all-time lows, and that was before going on a pretty big run up to the 180s, which was definitely a bit too high for this stock. But then you see we dip again to 85, pump back to 112, and most recently in May, we had a big sell-off to about $60 before going on another big run all the way to 115. So this stock typically likes to bounce from these levels from what I can see. I'm just starting a position in Lemonade again, and I typically sell when it gets to the hundreds. But yeah, I do like this stock. I think they do have some cool things coming for them, and I like them at these levels. Under 60 is what I'm really looking for to go a bit heavier, but just starting a position. So, under $60, probably see 58, then somewhere around 55, and below that would be all-time lows. Just depends how the overall market sentiment goes. Next up is Amazon, one that I don't talk about too often, but it is on heavy watch for me. So head and shoulders forming on the daily. I do expect this to come down a bit lower if the overall tech sector continues to come down. Now, Amazon is one that I'm trying to dip by, ideally around 3,000 a share. That's something I would put in my retirement for the long term, because I do think Amazon's going to have a big run into the end of the year around Christmas time. So if I could get this dip buy opportunity, honestly, anything under 3,200, you'll likely be fine. But, you want the best deal possible. So hopefully you get a little bit more selling pressure on Amazon. And I'll probably just add, one share or something in my retirement and wait for that Christmas run up. I do think Amazon will run. It typically runs the day after Christmas for that Santa rally. So on heavy watch. Another stock I've recently been buying is Chewy. I do like this stock a lot, and we still have that gap to fill from the earnings sell-off. So that was back in September, early September. Now, Chewy hasn't been this low in a while since the May sell-off, and we're actually just a little bit below that. So I have Chewy. If it continues to sell off, I see it going to 60 and probably bouncing from there. But anything under that, I'll really be going heavy. And the premium on this isn't too bad, so might even add some leaps. But this is one that I have been scaling into. I really like where it's at. And it's been, recently it was just in the 90s, so a lot of upside here. All right, next up is SQ. This is one that I watch all the time, one of my favorite long-term stocks. And we see this one kind of go up and down throughout the year. It'll go up to 260 or 280, sell off, and I've seen this happen a ton of times. So I actually did sell some shares closer to 280 and looking to buy some more pretty soon here. So it fell out of this channel it was in, and below 225, next stop would be around 220 for me, and below that, you're looking at 210. So SQ typically bounces from 197 to 200. That's where I'm personally looking to load up. It typically bounces in this range, but we'll see how it goes. If we zoom out a little bit more on this chart, you can see how many times it's done this. So it'll kind of pump and then dump. It just, gets sold off with tech overall and Bitcoin. So yeah, we'll see how this one goes. Definitely looking to buy this one a bit more. Hopefully it comes down a little bit lower. So that's pretty much it, guys. A lot of opportunity out there right now, especially with the sell-off. Here's a few more that I am keeping on watch to potentially buy into. Hope you guys enjoyed the video. Please like and subscribe and have a good one.